streaming software, but hopefully you guys can hear me. Wherever you are watching this, if you're on YouTube, Facebook, wherever you're watching this, go ahead and put a comment in. Let us know where you're coming in from. I see Doc Motivate. I see Doc Motivate on YouTube, so welcome. Today we are going to be talking about fundability and fundability as a whole, checking up on your fundability, all of the different aspects that go into your fundability as a business. There's over 125 different factors that lenders and credit issuers are going to look at in your business, most of which you as the business owner up until recently had no access to even see what lenders see. So I'm actually going to be using a cool nifty software to go over fundability, all the different main pillars of fundability, and how you can access all of the different factors that lenders and credit issuers look at in your business when they're making decisions on to lend to you or make a credit approval. Remember, you as the business owner don't actually have access to a lot of the things that lenders and credit issuers look at in your business. We call this whole concept fundability, and the 125 different factors are taken from our experience working directly with lenders to get our clients approved for financing. We broke down all of the different things that those lenders and credit issuers look at in every single business. Doesn't matter if you're a new business and you just started, or you're an established business, all of the fundability factors are at play here. So it's important that you really dig into fundability and understand it if you ever want to get financing in the future. Before we get started, I want to share a quick story. One of our account executives here at Credit Suite worked for a equipment financing company or equipment leasing company. And when a business who needed this heavy equipment would come in, the very first thing that they would do is check that business's business credit. Business credit is one of the most controllable and also most checked aspects of fundability. Doesn't matter what industry you're in, every single business on or in the US goes through a business credit system. Just like you as a person have personal credit, your business should have business credit. And like we said, that's just one factor of fundability. There's actually over 125 different factors, and we're going to talk about some of them today. So who do we have coming in? So from Facebook, we've got Albert. Welcome, Albert. YouTube, we've got A. Markham. Welcome. As I am going through fundability and the different aspects of fundability, if you have questions, throw them into the chat. I also want to share that we have an upcoming challenge called the $1 Million Business Challenge. I should have had this pulled up. You can register for that challenge at $1millionbusinesschallenge.com. Alfredo will go ahead and throw that into the comments, but I also want to share my screen. And let's see, here we go. So if you are a business that's doing six figures, even if you're not doing six figures, but want to do six figures and beyond, the $1 Million Business Challenge is for you. During the challenge, we're going to go over what we at Credit Suite have discovered. We have done and shared the proven system that we have used to scale to seven figures and eight figures and beyond. So if you're interested in growing your business to six figures and beyond to seven figures or even 8 or 9 or 10 figures, this challenge is for you. We're going to be going over everything that matters to your financing, everything that matters to your marketing and sales, how to automate your marketing and sales processes, and all of the different resources and things like that that your business is going to need to scale properly. So go ahead and register for the $1 Million Business Challenge. It is going to be at the end of this month, September 25th through the 27th, 2023. And you'll be able to get access to all of the tools and systems that you need to scale your business to 6, 7 figures and beyond. All righty. So let's go ahead and get started. Let me see here. All right. So like I said, we're going to be talking about fundability. Fundability is a concept that was developed over the course of about 20 years or so. our COO, Megan Christensen, worked for a pretty well-known big bank in the business lending department. And she was getting clients denied for financing, and she didn't know why. The little interesting thing about business lending that's very different from the personal side is there are regulations that actually prevent banks from telling you the exact reasons why your business was denied for financing. It doesn't matter if it's a big bank or a small bank. There are regulations put in place for the protection of that bank for fraud reasons, why they can't tell you. And what it typically comes down to some super simple and basic things that every business should focus on. Remember, fundability is for every business. It's not just for startups, and it's not just for established businesses. And in fact, most startups, if you're just starting a business, you actually have the opportunity to set up your business properly from the beginning using the Fundability Foundation. And if you're an existing business, let's say you've been in business for 10 years, chances are you've made changes to your address, you've changed bank accounts, you've done various things that affect your fundability or inadvertently affect your fundability. And you've done these things without even knowing it. So it's really important to continually review your fundability. And that's why we called this training today, it's time for your fundability checkup, because there are lots of things that even established business owners who are making good money and producing revenue every single month forget about or forget to go back and review on a regular basis. So fundability, we've broken down into 5 main pillars. Those pillars are foundation. This is where we have things like business address, your entity type, your EIN, the owners of the business, your website and email, and various other things that most business owners don't think affects their ability to get financing. You could even put in here social media and online reviews. We recently had a funding challenge where one of the lenders that came in to that challenge to share with the business owners there shared that they take into account online reviews into their underwriting process. So things that may not seem on the surface like it affects your business's ability to get financing actually do. The next thing would be financials, both business and personal. Business credit. So business credit is a big topic that we talk about a lot and that we help with here at Credit Suite. Your personal credit and your personal credit reports, and then your application process. When and how you apply for business credit or business financing matters to the overall ability for your business to get approved for that financing. So we don't want to apply for things that we know we're automatically going to get declined for, and the application process comes into play here. So what we focus on a lot here at Credit Suite and talk about a lot here at Credit Suite is Fundability Foundation. This is probably the most important and most overlooked aspect of fundability. I don't want to say most important, but it's one of the most important aspects of fundability, and it is for sure the most overlooked. Everybody wants to get into building business credit. Everybody wants to get an SBA loan, but what they don't think about is how their business is structured. Does their business look legitimate to lenders and credit issuers? Not only that, does their business look legitimate to potential customers or to vendors or to distributors? D&B has something called a supplier risk score. So if you have a product that you want to sell into stores like Walmart or to Target or any other store, they're actually going to pull your business credit. And to build business credit, we need good fundability foundation. So the aspects of Fundability Foundation that you need to think about, starting with business address. Does your business use a PO box? Did you file your business? Actually, in most states or all states, you can't file with a PO box. But does the business that you registered your business with, or the address, sorry, that you registered your business with the Secretary of State in your state match the address that you have on your website? Does that then match the address that you used on the application for the credit or the loan? Does that match the address that your bank has? Does it match the address that you've used to file your taxes? Your business address is probably something that can change throughout owning a business, and making sure that you update that address as you're going through this whole process is vital to to your business's ability to get financing. It looks like Albert, I'm a client with Credit Suite since June 2023. Thank you, Albert. How do I get the new software you're using now? I noticed on previous challenges that you use this more user-friendly. How do you get it? I'll go over that at the end, Albert, but you could talk to your account executive here at Credit Suite about changing from core to the Fundability product. The next thing we got to talk about is business entity, right? A lot of people starting out may start as a sole proprietorship. That is not a business entity that is fundable, right? Everything that you do as a sole proprietor is tied to you, the business owner, personally. All of the income is tied to you personally. All of the liability that you are doing as a business is tied to you personally. So the entity that you choose is incredibly important. LLCs, S corps, and C corps are all really useful to not only build business credit, but are also all fundable business entity types. Now, you should consult with a CPA or a licensed business attorney in your state that you trust to figure out what business entity type is best for you. They all have different tax implications from an LLC to an S corp to a C corp that you just have to weigh your options and what seems to be the best. Now, something that not a lot of people know about is that there are business structures that you can set up where you can actually build business credit and get financing for multiple businesses at the same time. So there's umbrella corporations and things like that you can think about as you're going through structuring your business entity and your overall business structure. Foreign filings, this is something that affects you if you have a business entity in one state, but have employees or have various other business actions or things like that in another state. So for instance, I am from Pennsylvania originally, but I live in South Carolina, and I may have a business entity in Pennsylvania that I need to produce a foreign filing for in South Carolina if I'm doing business in South Carolina with that entity. Ownership plays a role in overall fundability, right? If there are business owners that own over 25% of a company, they are going to typically need to be listed on financial applications in most cases. But the other cool thing is I actually did a whole presentation on business partners, how to find business partners, how to use and leverage business partners for financing. And business partners can be used to facilitate business financing. So if you have less than stellar personal credit, and personal credit is a factor in your overall fundability, let's remember, we can actually leverage a business partner's or a credit partner's overall personal credit or collateral to help get us financing. EIN, remember, all of the information that we're talking about here has to match everywhere across the board. Does it match with the Secretary of State? Does it match with the IRS? Does it match on our website? Does it match on the application? Does it match with our bank account? Everywhere you have information like business address, website, email address, phone number, all of those have to match, and they all play a role in your business ability to get financing. Then we've got business phone. Can that phone number be listed on 411? Can that phone number be listed in national and local databases? And do you own that phone number? I talk to so many business owners who use Google Voice. It's a really useful tool especially when you're first getting started, but it's hard or impossible to port what's called porting that phone number away from Google Voice. So if you ever need to leave a phone service, can you take that phone number with you? The reason that that's important is for a couple of reasons. One is if you can't take a phone number with you and that phone number is out in the world, it's then hard to make sure that you found everywhere where that phone number is listed and replace it with the new phone number that you have. So you could be missing out on leads. You could be missing out on customers calling you. There's all sorts of reasons why that's less than desirable. The other side of that is if you are with a service that can't be listed on 401 or shows up in a particular way when lenders and credit issuers are doing a check on your business as a type of phone line, then you're less fundable. So business phone numbers are important. We recommend services like RingCentral or Vonage to help facilitate your phone number. One is because you own that phone number. You can actually port it away from those services if you need to move. And two, even though they are what's called voice over IP or VoIP phone numbers, they are fundable phone types. Then we've got website and email. This is really important, both from a legitimacy standpoint to potential customers and to lenders. But it also helps with your overall fundability. And we've got merchant account. This is really important. Can you accept money from credit cards? And then the industry that you're in, to a degree, is extremely important, right? There are restrictive industries that may prevent you from getting certain types of financing. So overall, your fundability foundation is actually made up of a lot more, but when you fill this information out in our system, we can go and do cross checks to various other things. Now let's talk about financials. Financials play a big role. Are we making money in the business? The more money we make, the more fundable we are. The reason why is, if you guys have listened to Ty before or Megan talk about financing your business, you need the 3 C's: cash flow, credit, and collateral. So the more cash flow that we have in our business, the more fundable we are. The more time in business, the more fundable we are. If we have more tax returns for our business, the more fundable we are. As long as we're paying those taxes on time, filing those taxes on time, everything plays a role in our business's ability to get financing. There are even certain types of financing that require certain amounts of employees for you to have. So all of your business financials and your personal financials, to a degree, play into your fundability. So we talk about building business credit a lot, and that's actually the next pillar of fundability. But I want to talk about how these two are directly related. Now, business credit for the sake of building business credit for the sake of building business credit is not enough, right? To build business credit, you need to go and actually use the credit that you're approved for. By using the credit you're approved for to buy things like business supplies, inventory, things like that should help you grow revenue of the business. I want to repeat that again. Your business credit and building business credit should be used to help run and grow the revenue of the business. When you do that, you become more fundable, right? An 81 Paydex score doesn't make a difference, or that big of a difference, if you're not doing other things to help your overall fundability. You may get approved for more business credit accounts. You may get approved for a credit card or a business credit card with an 81 Paydex score. But to get things like SBA loans or term loans or revenue-based financing, you're going to need to grow the revenue of the business. And business credit is a mechanism that helps us do that. So the two play a role together. Now, business credit, as we know, there's Experian, D&B, and Equifax. Those are the 3 main business credit bureaus that exist in the U.S. business credit system. There are some others that are up and coming, like Ansonia and Credit Safe. Both of those, you can build business credit. Us at Credit Suite actually report payment experiences to Credit Safe, as do a lot of other businesses. But Experian, D&B, and Equifax are the main 3. And I forget the exact statistic, but so don't hold me to this number, but about 90% of lenders and credit issuers are going to check at least one of those business credit bureaus when they are making decisions about your business. So those are the main ones that you're going to want to build business credit with. Now, some stuff about business credit and your overall fundability when it comes to business credit. Unlike with personal credit, your business credit is based on payment experiences. But unlike with personal credit, if you are late one day, that is considered late. With personal credit, you've got about a 30-day grace period until they report it as a late payment. So it's really vital that as you're going through the process of building business credit, that you're paying those vendors and those business credit accounts on time or early. You also want to make sure that you're distributing vendors across your 3 reports. So what do I mean by that? One of our features of this product is actually what we call trade vendor distribution. If you work with a lot of credit accounts, or if you work with a business credit coach or something like that, they may not be thinking about how does your credit accounts show up on different bureaus, right? As you're going through the process of building credit, different credit accounts are going to check different bureaus. And if you have a really strong D&B report, but you need a vendor that only checks Experian, then it's going to be really hard to get that one credit account that only checks Experian if all of your previous credit is only on D&B. So it's important that we properly distribute our trade lines across all of the bureaus. Now let's talk about personal credit. This is something that a lot of us hear out in the world, that personal credit doesn't matter when it comes to financing your business. And there's arguments going on in all of the Facebook groups about PG'd or non-PG'd. Can you get business credit without a personal guarantee anymore? The answer is yes, you can. You just have to know where to look. But personal credit plays a huge role in your business's overall ability to get financing. There are lots of different types of loans and credit lines that are going to require a PG and or what we call a personal guarantee. So it's really important that as you're building business credit and looking at these other fundability items, that you pay attention to your personal credit and use a credit repair company or build positive accounts on your personal credit so that your personal credit is strong, just like your business credit is strong. Think of these like stools, right? If a stool only has two legs, you're going to fall over. So if your stool has if your business has good fundability foundation and it's got fundability business credit, and you've also worked on your personal credit, now you've got a stool to sit on. Or maybe you've got foundation, financials, and business credit. Now you have things that you can leverage in your business to get financing. Pierre Robert says, hello from New London County, Connecticut. Thanks for giving us great information. Thanks for being here, Pierre. So personal credit, you guys probably know the personal credit bureaus, Equifax, TransUnion, and Experian are the three main on the personal side. And you've got credit scores, both FICO and Vantage scores on all of those credit reports. So something that is overlooked is LexisNexis and ChexSystems. And then, of course, any kind of personal bankruptcies, liens, and judgments also play a role. Now we've got application process. Remember, when and how you submit applications is really, really important. So if you submit an application for something that you know you're not going to get approved for, it may not, inquiries on business credit, unlike on personal, don't matter. They don't play into the scoring algorithms like they do on the personal side. However, it ruins momentum, right? The other piece of this is how we apply. Are we filling out these applications properly and legally, right? If we are knowingly or unknowingly committing fraud on a business loan application, there's legal reasons why we don't want to do that, right? But we're going to get denied. Unknowingly committing fraud or things that could get your application flagged for fraud, which would just count as a denial, could be things like your address with your Secretary of State doesn't match the address that you used on your application, right? Lenders and credit issuers are going to use tools to their disposal like LexisNexis or directly with the credit bureaus to verify information. So we want to make sure that the information is congruent across the board. Then it comes to things like, if we get approved, do we negotiate terms? How can we renegotiate terms? If we don't get approved, how can we reverse those denials? So application process plays a big role. That is our overall fundability. We went through that fast. Something that I want to highlight in the fundability system, which is the system that I'm showing right now. And as you saw, Albert is a current client and already wants to move over to the fundability system from our existing system, is the fundability score. So the fundability score takes into account all of these different aspects of fundability and gives you a visual score of how your business is doing so far. It's from 0 to 890 and just gives you an overall picture of the fundability health of your business, right? A less fundability, a less fundable business is going to have a lower fundability score, and a more fundable business is typically going to have a higher fundability score. The cool thing about the fundability system, though, is we then start matching you to the different types of financing and business funding that you're going to be approved for. I think Megan has said this multiple times on various other live streams. Business financing is business credit and business lending, right? So we've matched, you can see this test account has matched with trade vendor credit, which is the fastest way and the most useful way to build business credit reliably that actually reports back to the business credit bureaus. And you can see that we're also matched with retirement account financing and book of business financing. So this may be an insurance company or something like that. You can immediately submit all of your information to our finance specialists, and we'll actually then verify that information and work with you to match you with the right lender or the right broker for that type of financing for your business. The other cool thing about this is the funding manager. We can actually log all of the different vendor accounts and other funded accounts that you have, how much you have in that vendor or that account, where that accounts report to, where it reports to, if any, and then if certain accounts need more information or need attention, like you applied for that account, but maybe you weren't approved yet, or you're waiting to see. We also help you track that all within one application. Something else that we've also currently added, remember, our cash flow and our financials are vital to our business's ability to get financing. We've added a cash flow forecast and monitoring tool that allows you to view, one is attach your bank account and accounting applications. So if you're banking with like Chase, or you use QuickBooks, Xero, FreshBooks, whatever you're using in the accounting of your business, you can connect those applications and now see both a cash flow forecast or create cash flow forecasts for your business to see what you can do in various other situations. And you can also see good analytics about your business based on, again, the applications that you add in here. So if you're adding your bank account and you're also adding your accounting software like QuickBooks or Xero or whatever you're using for your bookkeeping, all of that can be brought in here so you can see actionable information about your business, your business's cash flow. So all of that is extremely important to your business's overall fundability. Remember, fundability is not just foundation. You have to focus on foundation at first, and you also have to continually come back to foundation and check up on it as you're growing the business. Remember, things change. We move offices. Maybe you started your business in your house during COVID and you've grown and you're moving into an office building, or you're using a virtual address because you no longer want to use your home address. Totally fine and normal for businesses to do that. But when we update things like our business address or our email or our phone number, we have to then go back and reevaluate and make sure that we update everything that needs to be updated, from our Secretary of State to our bank account to the IRS. All of that information needs to be updated as we go throughout business. And it's important to continually come back to those things as you're running your business. All righty. So that is all I have today. I'm just looking through the comments to see if there are any other questions. I don't see any questions. I just want to remind everybody that we have a challenge coming up called the $1 Million Business Challenge. So if you're interested in signing up for the $1 Million Business Challenge, you can go to millionbusinesschallenge.com and sign up for that. If you're interested in your fundability, making sure that your fundability is all squared away, and that or you're interested in building business credit or getting a loan for your business, you can also schedule some time for free with our team here at Credit Suite. So you can get a free business finance assessment by going to creditsuite.com/consult, or go ahead and scan this QR code to the side of me, and you can pick a time that works best for you and your business to schedule that free business finance assessment. Also, if you're interested in Fundability, you can get, I think that's the right one. We'll keep it with the business finance assessment. Oh, here we go. Fundability mini course. Thank you. So if you're interested in your overall fundability and knowing more about fundability, you can take our free mini course. It's a 3-part video series that walks you through a kind of a deeper dive of all of the things that we talked about today. You can get that at creditsuite.com/foundation, or go ahead, also scan the QR code. Remember, if you want a free business finance assessment, it's creditsuite.com/consult, or scan the other QR code. All right, let me just get back to our chat. It doesn't look like we have any additional questions. So I appreciate everybody sticking with us today, and hope all of you have a great rest of your day, and we'll see you later.
Easily access business credit and funding to grow your business through the unique Fundability System by Credit Suite. Access your Fundability score to see how fundable your business is right now, and in one click, exponentially increase your ability to get approved for credit and loans. Funding Explorer integrates with your business credit data to show you all business credit cards, loans, and credit lines you can qualify for now. And it shows you simple changes you can make to your fundability to unlock even more funding options. The Fundability System gives you access to the largest supply of high-limit business credit cards, vendor accounts, and auto financing that actually protect your personal credit and finances. And you get access to loans and credit lines through over 1,000 lending sources. Get the most money to grow your business at the best terms, quickly and easily with Fundability.